Hello folks, I'm L.A. Little, and this is your daily TA wrap. Where we take a look at these markets and we do it from a neoclassical perspective, asking ourselves, what's the trend? Which way are we pointing? And which way, or actually when, should we get in or out? That's neoclassical. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time. Here from the base of the beautiful Rocky Mountains. Folks, it was another day of squeeze up. You could probably sum the day up in a couple of words. Essentially, it was Apple and Google. I mean, if we take a look at these charts, pull this over and examine what we have here, Apple pushes back to the top of the range. That range is in effect. Matter of fact, there was an article this morning on the front page about it. This bar is the controlling bar, if I can get it shown correctly there. That's been the controlling bar. That guy has been the story, and here you are coming up to the top of it to try to break out. That was the story today. Apple's 23% of the weighting in the NDX. So when you move that one, you move the whole NDX. The NDX is what kept the whole market up today. You couldn't do anything anywhere else. And a lot of times that's the way it works. The other one, of course, was Google. Google was a breakout, big push on earnings not that long ago. Now you got a breakout today. Again, these two together, if you add Microsoft in, they're a third of the weighting of the whole NDX. Google itself is about 7. Actually, they're more than a third now. 22, 30. Yeah, it's about 33 together. Microsoft and Google about 5-6% each. So Google gets a breakout. So if you add this to Apple, you know that's essentially 1/3 of the NDX. Or 30% of it. Almost. So if you want to know why the market went up, well, there's your answer. Let's look at the ending numbers. Here we go. Yeah, we had the industrials flat. Didn't go anywhere. We had the S&Ps up 0.27, flat. Right? Where was the moves? Well, the moves were where we just talked about. Composite. Composite gains 23 points. 0.58, 0.5%. NDX was the driver as well, 18 points higher. And then of course the Russell 0.87. So what do we got? What do we got going on? It was the listed issues carrying us before. Is this just rotation? We're going back to the tech now. It's end of year. Push, push, push. That's what they keep doing. It's what they did today. And how much longer they're going to do this, I'm not sure. But for right now, they keep pushing. Gold was up slightly today. We really didn't have much movement outside of that. The dollar was down again. But the real story today, technology, tech sector, small cap. Small cap broke out. NDX last night was the only one suggesting that we might get a pullback. But when they drove Apple, they drove Google. Forget the pullback. That's not going to happen when those two are going up. Let's take a look at the charts themselves, see what they look like. If we start with the listed issues, start with the SPX, you can see here, now this is the second day, and again, this is where it comes into interpretation, right? Because yesterday and today, you go over and you can't get higher. That's 2 days now. Although today's volume was higher, there was an order imbalance at the end of the day. And if you take a look inside, and matter of fact, let's pop to a different chart. If you take a look inside, what you're going to see here, let's get this one up. Let's put up the SPX. Let's get it down to 1 day. You can see what happened in the day, right? So all day long, you take and you drive these things and you won't let them come in, right? You had the first push down, and then the rest of the day you're pushing all the way up, right? And then blow it off at the end. This is the second day this has happened. It's not the first. Go to yesterday, you had the same sort of thing. You can see it here. I'll pull yesterday in. You had the order imbalance. It really wasn't an order imbalance yesterday. You simply had selling come in at the end of the day. Well, today it was the opposite, right, where they just blew it out at the end of the day and they didn't even give it a chance. These things close flat because they gave it all up. Now, if we pull over and look at the index, right, it's a different story. Well, different in the sense that you still had the sell-off, but not nearly to the same magnitude. Why is that? Well, because Apple and Google, in particular Google, didn't sell off at the end of the day, right? Google sit up there. Now, Apple did. Apple went up and tested, and I was telling folks that was watching this with me today as we were trading, Apple went up. That's test 536.14. That high, that range high, that big bar I was talking about as it came on the show, was 2 cents lower. It went over at 2 cents, came back up and tested again, failed again. That's when you got the sell-off here, and the order imbalance took place elsewhere. If we go over and look at the IWM, or actually we can look at the Russell here, the Russell also big strong push all day long in the Russell. They gave it up at the end, not nearly as bad. That was a 2-day push we were looking at. Let's go into 1 day. Here's the 1 day. Well, as soon as we get it, there's the 1 day. So a nice big push all day long. They gave it up some at the end, but not nearly as bad. So tomorrow, volume's going to die. Nothing's going to, I mean, there are going to be, if you think you haven't seen any sellers yet, believe me, you're not going to see sellers tomorrow, because you got Thanksgiving, then you got Black Friday, then you got a short day on Friday, you got a big set of numbers tomorrow, and you have the PMIs going to start printing into this week overseas, and then again here next week. So am I going to short in front of that? Well, that's a hard one to do, right? And I suspect most people are thinking the same thing. So that's going to be a tough deal to get this thing to sell off. Let's go back, look at the Dow Jones. Dow Jones pushes up. Dow Jones does the same thing. If we look at it intraday too, if I can get that chart up, you're going to see the same thing as you saw on the S&P, big hard sell all the way back down to where it started. Dow Jones, so he gets up, tests the top. That's twice. 2 little dojis at the top. Is it finally going to give us a pullback? Well, it left more volume up there. The high was over yesterday's high, I believe. Yes, it was, and more volume. So these things can hang more. Let's go look at the sectors. The sectors last night were the only ones giving us a clue that we might try to see this thing trade sideways to down today. Give us a pullback. It didn't really happen, but we couldn't get any traction where these sectors were telling us, right? Because most of these sectors are looking at the SPX. These are based off the SPX. IYT couldn't go anywhere. Same scenario, still stuck at the top. The SMHs. Now the semis actually had some decent bounce today, no volume. XLB. This one was saying that we should try to retrace yesterday, and it did. It's trying to get back into this bar, 44.19, 44.21. I would think that you test into this area one more time tomorrow. If volume picks up, it would be a different story, but with tomorrow being what it is, I don't think we're going to see volume pick up. So more than likely it just hangs up here and waits. The XLE had pressure day before. Today, okay, so now today it goes into that bar, it looks like finally. 86.97. Yes, it got into the bar, didn't have the volume. I would expect this one holds now and hangs. Financials. The financials sold off at the end of the day. They have the same scenario again, so they didn't get to the top, or they did. Let's see, 61 and 61. So they got to the top, less volume, sold off at the end of the day. The financials are going to try to pull back a little bit. XLI, so most of them look like they're going to hang. Financials being exception. XLI still hanging. Doesn't tell us anything different yet. XLK tries to go up along with the NASDAQ today. Still hasn't gotten to the high, which is interesting. XLP. That one's still trying to pull back. Pull back into this big bar again, 42.70. XLU, the one I don't even like to look at, that was weak again today. This one's back inside this big bar. And let's see here. This is 38. And we traded down to 38.11. It's going to come into this bar tomorrow, and then we'll see if it's going to make it all the way to the bottom of the... So the September 18th bar is the bottom of this area. The October 14th bar is the bar it's going to try to get into tomorrow. If it can get into it a little ways and stay, then it's back to the bottom of the range here. XLV, this was the strongest sector. And came off a little bit, not much volume, so it closed the gap today. This had already done, I talked about it last night. For those of you that didn't see the show last night, this had already done two, and it was the first one that did it, which is why I keep pointing it out. Here we go, from here to there and up, right? That was an ABCD structure. That got finished off. And then you had another one from here to there and back up, and that one got finished off. So you finished off both ABCD structures. That's the first sector to do it. And how this one behaves would give us some sort of a clue as to how the rest, you would expect initially, while the rest of them finish off, this one should just simply work sideways. That's usually the way in a strong market it works. And so your range breakout was up here. So I would expect that you would see the XLV trade in this area, while the rest of the sectors and the markets try to go up and finish off their ABCD structures. We'll see if it plays out that way. I expect it will. XLY, discretionary. We got Black Friday coming up. This one just keeps pushing. And it also gave us a failure last night and just didn't give a flip. Right now, again, are we going to find any sellers? I don't know how you're going to find sellers at this point. The only way you're going to get sellers is something exogenous hits the market and forces the selling. Because there are no natural sellers up here. Nobody wants to sell. Why would you want to sell? Because you can't get back in if you do. And so nobody does. And it just keeps hanging and pushing and pushing. And as we get into the slower and slower part of the year, it's going to be even more aggravating for anyone that's not in or wants to, that's not in, wants to get in, or is on the wrong side of the market, God forbid, because that's very painful right now, because this thing is giving you no kind of pullback. And unless you get an exogenous event, at this point, I don't know what's going to cause it. I was looking for a small pullback today. Couldn't even get that. All right, they took Apple and Google up, and that was the rest of the day. Let's go over the ox markets and see what's happening. So I saw the dollar was down a bit today, and it's still... Okay, so it's still inside 2173, 2170, closes under it. Well, unfortunately for any kind of dollar bull, it looks like this range is still in effect, which means, with the close today, it means you can go all the way back down, test the bottom of this thing. And I just don't see anything to stop it. So the only thing that's here on the dollar was this bar, and that will be the test, and then the bottom of the range is next. So dollar drifting lower again. FXE, I believe, actually broke back to the top today. Yeah, it did. So the top over here, 133.71, closes at 134.17. gets over that big breakdown bar. So, it's amazing to watch these things because, this turned out to be a one-day event, and that was that the ECB once again, and the ECB of all the central banks, they have this down pat. They don't actually do anything, they just talk about doing something, and the market reacts for a little while, and then it starts working its way back the other way. It's relentless with these central banks. But yeah, this one's over the highs. It can go to the next one, and the next one is the close of this gap. That low, 34.29, and it's almost there. So I would venture to guess that tomorrow this tries to close the gap. So the gap bar is this bar. That's where it looks like it wants to go next. Just like our market's just grinding higher. October 31st bar. Let's see, gold, silver. I don't think gold was able to do hardly anything today. It was up slightly after hours yesterday, so today it really went nowhere. It's just hanging. TLT, let's look at the bonds. And they keep pressing higher. I kept thinking the bonds would come back in, give us another test, and tell us that that's reversal was real. It didn't have to. If you really look at what happened here, there was two major things taking place. One, you got a big volume day down, and then a reversal with lighter volume back up, so under, back over, after what is an extended move in bonds, and that was it, right? And it just keeps grinding higher. The other piece that was happening was we came down to test one more time. This is the third time, or second time now. We tested here, and now we came down to test one more time. Now we've lost the other big bar. It used to be another big bar right in this area. So on the weekly it's still there, but here it's not. But the point is that it's traded down in this area twice now, here and again here, and both times it's held and regenerated higher. So and on the swing point low test now, it broke it again and it's back into this one, and it's trying to get back up to the top. So bonds, yeah, you can get a little pullback, but more than likely it just sets up another ABCD structure to try to get to the top area. This is a big range trade. Bonds are trying to put in a bottom that's probably going to last 3 to 6 months, and it's a painful bottom, but that's the way bottoms take place. Once you see once you have a bottom starting to form after a long trend down. I saw UNG was halted today. I don't know what the event was there. I think the numbers usually come out on Thursday. Maybe they pushed them out earlier. UNG also is putting in a bottom, and UNG is a classic bottom because they blew everybody out again before they put it in, and that's this bar here. On the weekly, it was actually less volume. Okay, I don't see much else here to talk about. I'd be much more interested in talking about what you want to talk about, so let's do that. So what do we got here? Hello, happy Thanksgiving from Alex. Happy Thanksgiving to everybody out there, you included, Alex. It's that time of the year where we have to be thankful for our good fortune, our health, our family, for everything, that life gives us, and my best to all of you with respect to that. I can't remember if I asked about this one before, but MNDO looks interesting, so let's pop that guy up and see what it looks like. Alright, MNDO. Okay, so this is a what is this? This is a subsidiary that develops, manufactures, and markets real-time and offline billing. So they're in the information technology sector, and so they had a nice big push up. And they're drifting back in. Okay, let's pull this back and look at weeklies as we do this as well. Okay, so this push up, November 11th, 631 into yeah, 637 was this high. Okay, so the first thing that I notice here is the big bar off the top had roughly the same amount of volume, a little bit less, right? So you push up and you get, it's not what I meant to do, but you push up and you get right into that bar almost, right? And that press into this area, let me get a different tool, right? Almost into it. And then last week you actually got into it and you had less volume, right, than that one. So you press up, nice volume, right? Then you go into it, you test into it finally, you don't have as much. So what do? You retrace, and that makes sense. And now that you're retracing, you're coming back into what is the biggest support area, and it did it today and did a little doji. So I assume you're wanting to buy this. What does your expert eye think of that one? The average volume is light. Yeah, I think you're on target here, that this is the area you want to buy it. So it's hard to get anymore. It's hard to find anything out here that gives you a good buy. But this is not a bad one. This little area it came into was a good buy area, and it's right above it. So the nice thing about this is you can buy it, you can put your stop right below it, right? You don't have to give it hardly anything if you're trading on this short-term time frame. So you buy in this area and you put your stops right down below it. Now if you want to be safer, if you want to raise your probabilities of a successful trade, you have your stops down here. But it depends on how much you want to give this thing. That stop at that level would be underneath here as well, right? So that would give you a stop down, what is that, about 170, which is the same thing here. It gives you a very high probability that you're right, and you're shooting back for at least a retest into this area, or potentially back to the top, right, of that big bar. So you can just eyeball it here, and you can see right now your reward to risk, if you put your stop here, is almost 1-to-1, right? They're almost equal. If you put your stop here, right, you're getting a much better reward to risk, right? You're shooting for a test back to this area, right? So you can see about a 2-to-1. So it depends on how you want to play it. And you can play it in multiple ways. You can actually buy it here, put your stop down here, and have partial stop out here and the rest of it down in this area. And a lot of times that's the way I would want to play something like this. So you take and buy it, and you put part of your stop here with a higher risk of getting stopped out, and then you have a higher buy. You buy again down in this area, right, if it gets back there, with your full stop down here with a higher probability of a win. And then that all assumes that if this comes back, it comes back immediately, right? That's why you would want to buy it there, because the probabilities are decent. Yeah, I like the way that one looks. That's a good one. JetBlue. Let's see what JetBlue looks like. So JBLU. So this is a carrier, air carrier out of the eastern part of the United States. They have a pretty good profit setup, I believe. Let me see what they look like here. Yeah, and all these airlines. I was reading the other day. The airlines, you know how they put the baggage thing on, right? Where they charge you now for bags. 86 billion in a year. $86 billion charges extra out of nowhere, right? Used to that wasn't a revenue source. And all of a sudden you got a revenue source of $86 billion. It's amazing. They need to find another baggage tax, all right? I saw, talk about that, I saw, this is funny. My wife got a ticket, a quote-unquote speeding ticket the other day. She was traveling 9 miles an hour, over whatever it was. There was the charge itself plus, I think it was called a surcharge, right? What the heck is a surcharge on a on a ticket? It was like 30% of the total. It's like, oh my God, where do they come up with this stuff? Big nice bars here, JetBlue. Okay, so you get above, you have a nice support zone right here, right? Using this bar and that bar, the congruence of those two, that's this area right here, okay? So the congruence of those two is going to give you a nice support zone. It's going to redraw tomorrow because this came back. So again, just like the other one, your highest probability, let me clean this up, your highest probability trade in this one is here. And I'll show you why. And it requires a little more patience to get in, but your highest probability is the overlap, the full overlap of those two. And so what you would do is you would try to buy at the beginning of that overlap, which is that area we were just talking about, potentially towards the bottom of that overlap, with your stops down below it based off your ATR. Right? That gives you the highest probability of a win and a retest back up into the highs probably. This also looks good, and I'm looking over on the monthly. It broke out on the monthly, it broke out on the weekly, and it broke out, of course, on the daily. So that's a very, that's a very powerful move when it happens, and that's what you got. Typically what happens is you get 2 to 3 bars, continuation, fast move, on the highest time frame of which you have the breakout. Now this one's not finished yet, this is the monthly, but that would be your highest time frame, which means that you should see this carry for 2 to 3 months. So from that perspective, I think you can buy a retrace on this. You want to get it as close as you can to the bottom of this bar, which is 821. So, all right, somebody just texted me, it looks like, so let me find that, see what they're asking. So you can text me if you don't know that. It is possible. And I'll take your text calls as well. All right, let's see what we got here. Oh, okay. Well, this is not asking for a symbol. The message, this is a member evidently, says, I'm really digging the personalized trading signals. What is the max on how many symbols you can put into this awesome tool? Well, I have a second. Let's just pop over here and we'll look at it. So, personalized trading signals is a tool that's available to members, personalized trading signals. And what this does, and I happen to have Facebook on mine as the very first one that triggered today. What this does, and what's great about it, is it allows you to see, and I'll pop into Facebook as well, it allows you to see it gives you the most granular signals possible. And those granular signals look at anything having to do with, retest of a retrace of a swing point, an anchor zone. So if you get close to an anchor zone, it will warn you, either up or down. If you get into the anchor zone, it will warn you. If you are breaking out or potentially going to break out over any swing point, it will warn you, and vice versa on the backside, on anyone on the downside. Or if you're retracing to one or retracing to one on the top side. So any of those conditions, it's a very granular tool. If you have a portfolio, you stick all your symbols in here and you can use it to scale in and out. And that's why I believe this gentleman, this member, is telling me it's an awesome tool. How many? You know, I'm going to allow you to put multiple personalized trading signals next. I think I bumped the number to 1,000 so you wouldn't run out. But what we're going to do is we're going to create it to have the same sort of thing that we have here on your watch list, to where you can have multiple personalized trading signal groups. And then that way you can categorize them. So, for example, you may want to have some that you want to get in and some that you're already in, for example. So right now I think it's like 1,000. It's huge. We made it big so you wouldn't run out. But one of the enhancements that's been asked for and that we'll do is to allow you to have multiples, and that's something that's coming. All right, folks, I'm out of time here. This market just wants to grind. I mean, there's nothing in here that's going to stop it that I can see. Yeah, we can get a pullback at any point. It's a buy if it does, right? This week, more grind. We had an ABCD structure up to 1820 on the S&Ps. Where did we get today? Let me pull the S&Ps right up before I leave here. I think we got up to, let me pop them up real quick. We got as high as 1808. So we were within 10 points. 10 points is nothing. We can do that in a heartbeat. So if you're wondering where we're going, the next target is 1820. I suspect we're going to grind up there, whether it's this week or next. And, knock that one out and set up the final one, which is 1860. And probably get an ABCD structure to take us to that one. Have yourself a great night. I appreciate you being there. Tell a friend, tell two. As always, I'm L.A. Little. This is and was your daily TA wrap. Have a great night, folks. Good night.